access to finance, securing angel investment. Really looking forward to today's session. My name is Nicola Woods. I am the Ireland Programme Manager for Enterprise Nation, so looking after our Irish activity. Delighted to be joined today by Johnny Harte, who's going to be chairing a bit of a discussion with Anna Sheehan and Niamh Sterling. This session is going to be really focused on angel investment. So whether you know about angel investment already, whether you're curious, maybe you're thinking about going through an angel investment for your business, hopefully this will provide you with a bit of insight. This session is part of our Access to Finance programme, which we run in partnership with the Strategic Banking Corporation of Ireland, the Banking and Payments Federation of Ireland, AIB, Permanent TSB, Bank of Ireland and SAGE. So we're delighted to partner with all those great organisations to deliver this 12-month programme. We have sessions like this where we're focusing in on a particular topic. We also will be launching e-learning very, very soon. So there'll be little bite-sized videos on the platform for you to watch at any time that suits you. So I'm not going to talk much longer. We'll get right into the discussion. I'm going to hand over to Johnny. And if you do have any sort of questions, please feel free to interact with the conversation today. Pop questions into the chat, raise your hand, use the Q&A function, whatever works best for you. But really hope this session is of benefit for you. Over to you, Johnny.
Thanks very much, Nicola, and good afternoon, everybody. So yeah, as Nicola said, today we're going to be discussing angel investment, and we'll be covering things like what exactly angel investment is, why it might be a good fit for your business, and how best to go about securing investment from an angel investor. So I'm delighted to be joined today by Niamh Sterling from Halo Business Angel Network. He'll have some great insights for us, and also Anna Sheehan from Refunk, who will tell us a bit about her experiences of raising angel investment for her business. So I think we'll get started just by getting Niamh and Anna to introduce themselves. So we might start with you. Niamh, do you want to maybe just give us a quick a little bit about what HBAN is?
Yeah, sure. Thanks, Johnny. Hi, everybody. Delighted to be here with you all today. So HBAN is an all-island organisation. We are funded by Enterprise Ireland and Intertrade Ireland. So our remit is to support angel investing throughout the island of Ireland. We don't charge fees for a pitching event. HBAN itself doesn't take any equity. We run about 65 events a year. Our network consists of over 700 business angels, and we run about 65 events. We have 15 syndicates nationwide and 4 overseas: London, New York, Singapore, and Dubai. And our syndicates are either sector specific or regional specific. And really, what we do is invest in companies at seed stage. We also invest then in follow-on rounds of the companies that we have invested in at seed stage.
Great, thanks for that, Niamh. And Anna, for those attendees who may not have heard of Refunk yet, do you want to tell us a little bit about the company?
Yeah, thanks, Johnny, and hi, everyone. So Refunk is a furniture upcycling platform. We connect conscious or sustainably minded consumers with freelance upcyclers who give the furniture a new lease of life. So as a consumer, you can purchase upcycled furniture via our website shop, or you can request to have your own piece upcycled by logging a job on the site and giving detail of your desired design. And delivery is arranged between the customer and upcycler, but in the future we hope to partner with the logistics provider.
Brilliant. Great. Thanks for that. So we might go back to Niamh maybe, and just to kick things off, you might just explain to people on the webinar, what is an angel investor exactly?
Yeah, so an angel investor is an individual who is interested in being part of great, Irish investment stories, success stories. Typically, the kind of demographic or makeup is either cashed out entrepreneurs, family offices, multinational managers, SMEs, senior managers of SMEs, or multinationals, and really people, I guess, who have the capacity and interest in angel investing. Most of our angels will say, actually, the real driver behind the investment is not just purely about capital or making gains and exits. It's also about being part of that journey. It is smart money, we would always say. These are people who have walked this walk before, understand the journey and the challenges around it, and usually have domain expertise and a really well developed network that can open doors for companies as well. In terms of like true demographic, be it male, female, or we've worked really hard over the last 5 years or so to make sure that our network is as diverse as possible, because what we want is to have an angel network that reflects society and and make sure that everybody gets the opportunity for investment. I should have said also that we are sector agnostic, so we invest in a broad spectrum of, be it wearables or ARV or fintech, medtech, but we don't invest in services, and technology is the vast majority of our investments as well. But yeah, that's kind of broadly our makeup is. And like it's the demographic, the profile is getting younger, and we kind of want people to feel that angel investment is for everybody. It's not just for high net worths, which would have been seen as before. This is an opportunity to kind of get start your investment journey earlier on, and we've worked really hard to try and make that accessible for everybody. But there's factors and that I'm going to probably address them later on, I know, in some of the questions around having the capacity to follow on your investment, and that we're not crowdfunding, and that's just not what we do. It's not what our remit is, and it's not why HBAN was set up. Really, we're there to facilitate and run events, select investable companies, and run those events for that network, and then we do lots of stuff around the network in terms of angel education and master classes and learning academies and that, so that everybody, you don't have to know exactly what you're doing when you come in. You just have to have an interest. And we have a lot of resource there in terms of what do exits look like, how do I manage my tax, what do I think about in terms of how do I select my first company to invest in, all of those kind of bits and pieces. So
yeah, and I think it's great because there's for people who are starting out on angel investing, or people who are looking for angel investing with HBAN, they can get very targeted in terms of, if they're looking for impact investor or they're in the medtech space, at least they know that there's specific groups that they can talk to directly rather than just a general sort of broad angel investor base.
It's funny, Johnny, like that, you're absolutely right. But also, so one of the things that I do is, and I would say each sort of syndicate nearly has its own kind of personality, because they are all looking for something slightly different in investable companies. So obviously medtech, for us, the definition of medtech is it's going into human body or it's being used in a theater. It kind of brought it really, life science doesn't fall into that. Patient pathway technology doesn't fall under that. But we obviously have, syndicates that are interested specifically in those kind of areas as well. Founders, I would say, in terms of, yes, you can be targeted. We don't, it's not Tinder for angels. But founders are often looking for maybe passive investment as well. It really depends on the profile of the founder. So if they're spinning out of a multinational and have a very well developed network, have deep domain expertise, understand the real world problem, know that they're solving it, they may just need capital. They may not need the same level of network that maybe somebody who is not spinning out, or maybe spinning out of a university and hasn't commercialized a product before. That's a different kind of skill set that they might want to have a gap in their team that actually they really could do with having somebody on their team that they can kind of run that information by, and that would be a really great value add for them. So some of it depends on the needs and expertise and domain and knowledge and that of the founder as well.
And Anis, so I know you had looked at kind of various different routes or different funding options, and why did you end up going down the angel investor route? What attracted you to that form of investment?
Yeah, so I suppose to give a little bit more background, Refunk was founded by myself and three of my classmates in 2020 when we did our marketing masters in Trinity. And we came up with the idea in a university competition that year and ended up just sort of bootstrapping the business through various other accelerators and competitions throughout the university ecosystem. So we competed in Launchbox, which is the Trinity's like accelerator program over the summer last year. And as we got to the end of that, our money was sort of starting to run out, and we were like, where do we go from here? And at the stage we were at last year, all of our growth had been organic. We hadn't launched our platform yet, so like we were doing everything through Instagram, and like for a VC that just wasn't enough traction. We did like approach a few, but we were told to come back when we had more growth. And then we looked at crowdfunding too, but we sort of wanted more than just the funding, and knew that, like Niamh mentioned, the right angel could provide like more than just funds, but access to like mentorship and experience, their own experiences and network as well. And we thought that that would just be super valuable to us on the beginning of our journey and the stage we were at then. So yeah, that's kind of how we narrowed it down. And I think when we went to Web Summit last year, that really lit a fire under us to, just send out our deck and connect with as many people as possible and get it out there that we were looking and see what we could make of it.
And it was more through your network and people who knew people, and that's how you got the introductions. Is that the kind of way it went?
Yeah, exactly. So like I mentioned, we were straight from university. Some of us had like a bit of work experience, but not a huge amount of connections, and certainly not a huge network in the startup ecosystem. And yeah, when we got back from Web Summit last year, we were feeling like really motivated and determined, and we perfected our deck after that and started just sending it out to every connection we had, attended networking events, and kept our network up to date on like our progress via LinkedIn and quarterly emails. And yeah, of course, we didn't hear back from every person that we sent our deck out to at all. And it was last February that we pitched to our current investors. We had like a few conversations with them and presented like a funding plan of what we would do with investment. And in the end, the process actually closed out really quickly. It was in about 2 weeks from our first conversation. But yeah, certainly there was like a good few months where we didn't know when we were going to get our next funding. And yeah, we just had to be really determined and connect with as many people as possible and just get that word out there that we were looking for funding.
I think you mentioned there, and it's one of the things that a lot of people, I think, don't do, is they don't update people that they meet along the way. So if you meet a potential investor and they say, well, it's not for us right now, I think people don't update them, the following month or next quarter to say, what we said we're going to do this. Well, actually, we've done that, and this is where we are now, that kind of stuff. So I think it's really important that people, recognize that that's an important part of the process. It's not just meet them once and then, oh, you didn't hear back from them. That's dead. Is to keep updating them and keep them in the loop of what's going on. I might just ask you at the moment, what's the environment like for angel investing? Are they active? Is there investment taking place? Are companies seeking investment getting it?
Yeah, so for example, now obviously the landscape is really changing at the moment, and there is definitely an uncertainty coming into the market. We are probably really only starting to see that happen now. And it's just beginning to, like, we've just kicked off our autumn season, so it'd be really interesting to see now how that trickles down into the investments. We had a really strong 6 months prior to this. We have pitching events from September to June, so January to June was really strong. And we would have had a few kind of in the papers, the likes of Thriftify, where we led the round at 1.3 million, and there was Crop Biome that they just have to do two that I worked on, but they were at 495 went in. So it was a really strong performance. Last year we did 71 deals, and we put 18 million into those. So that kind of gives you an indication that would mean we'd be a very active investor in the marketplace. But, you know, as I said, like, things are going to change and people are going to be more selective. It's going to have a downward pressure in terms of valuations. And, you know, companies are really going to want to make sure that they're investor ready. And have all their ducks in a row before they go looking for money in that, and that their, you know, their financials stack up, and you know, there's a lot to be done there. And the data room's ready to go, and that, because it is going to be tighter, it's going to be more competitive. There is likely to be less angel capital around, and you know, yeah, funders will, or, you know, investors will, you know, maybe look at putting in some of their existing portfolios. So companies that we would have had in seed round may be coming back in earlier than we might have anticipated, because, you know, their costs have rocketed. So we haven't really seen that happen yet, but, you know, we for sure do expect to have a tightening of belts and have some sort of impact over the next 3 to 6 months that we start to trickle down.
I think you mentioned it earlier. So, you know, one of the things you kind of, not always, but you typically see is angel investors following their money in subsequent rounds. And how important is that for, you know, a company looking for investment to kind of be aware that that's something that they can get, or that the investor talking to has the potential or the ability to do that?
Yeah, so in terms of the angels that are coming into us, we would always kind of, you know, say to them, and they know, like, through the education that we do and that kind of thing, that, you know, to have the capacity and, like, you know, to understand that, you know, they don't have to, but they will be diluted then in the next round. And a lot of them will just, you know, put in again to maintain their existing position, or, you know, like, there's so many different variations around that. You can see there's no kind of one size fits all, but usually you'll have a fresh investment. If we've invested seed round, they'll probably want to see, you know, a new investment coming in. They may be doing a bridge, in which case they might go to existing investors and have some smaller money coming in, fresh investment coming in, but they may actually find that the lead investor in the first round will lead again into a bridge round versus a Series A, where you may have a fresh investor coming in. But typically, like, the angels will know. It doesn't always happen, you know. They you know, it's not a prerequisite, but the reality of it is, you also know that actually, but if I don't, you know, they're going to be diluted and potentially washed out in the subsequent rounds. So, you know, but there are conversations that you as founders have with them as well, you know. You know, you go through a process, and again, we'll probably touch on that. So you know, you're going through a process with them, you're opening a dialogue and developing relationships, and, you know, it's perfectly fine to say, you know, will you have the capacity to follow on, you know, because companies, we only invest in high scale, you know, export driven companies. So, you know, the investors know that that this is, you know, you're going from seed to Series A to B to C. So, you know, this is a well-trodden path. This is the norm. So, you know, they know that they potentially have to follow on, or you know, dilute over rounds and that. So.
Yeah. And you touched on there, Niamh, the process, right? And I think, you know, one of the beauties of HBAN and the syndicates is that, I think as a general rule, you know, you might have 4, 5, 6, maybe more angel investors in a round in your company. But you probably only deal with one sort of lead investor at a time, which makes the process, I suppose, maybe a little bit easier than having to deal with 5 or 6 or 10 individual angel investors. But that's just probably one part of the process. That there's many different assets or aspects of it, I suppose, isn't there?
There is. So the process in terms of, you know, the search, that we get about 600 referrals a year. So that'll give you an indication of the number of, you know, decks and business plans that I'm looking at. And as you said, we've quite a broad remit in terms of, you know, sector interest, age and stage of companies that are of interest in that. So, you know, we factor all of that in into those decisions, but and that selection process. In terms of the actual process itself, it's a pretty well-defined set of steps. You know, so from, you know, sending on your deck, your financials, business plan. If you're coming in and you're raising, I'll give you an idea. So if you're coming in, actually that's kind of more an investor ready, but the kind of, there's the pitch, you know, so we do pitch prep with you. Say you're selected, we'll give you an official offer. We will, you typically, when you come in and you get an opportunity to pitch, we will do our best to put you in front of more than one group. You know, so you might get into Forum, which is our nationwide investment event. And then you might get the opportunity to pitch if one of your founders is, say, from Kerry, you might get to pitch Kerry Group, or if there's an impact element, you get to pitch impact. If you're trading in the UK, you might get UK, you know, so we'll do our best to kind of, as well as, say, it's technology platform, you might be a really good fit for Bloom, because actually this is a really defensible technology platform. So usually we'll try and give you an opportunity to do more than one pitch, right? And then in terms of, so there could be a pitch, a second pitch. Then we facilitate a deep dive call. That's also something that we facilitate if there's more than 3 angels interested. If there's less than 3, we will do direct introductions to them, and then it's up to you to take that conversation from there. Or we have a deep dive call. So the deep dive really is an opportunity for all of the angels who are interested in learning more about your business, to kind of lift the lid on the business and, you know, ask the questions. And that, again, there's a process around that. We will have said to you, you know, you've got 10, 12 angels interested. Please share your investor deck or business plan and full set of financials ahead of that call. That typically happens 10 to 14 days after the first pitch. You'll have your deep dive call, and the angels will have had an opportunity to review all those documents, figure out what questions they're interested, you know, figure out the stuff that they don't really get. And it's an opportunity for the founders then to showcase their business as well in a much greater way, because there's only so much information you can give in 10 minutes, right? And then from there, then the process is, you know, we give them about, you know, 2 weeks, 10 days to 2 weeks again, just to review the information that's been shared in the deep dive call. An opportunity for you maybe to share, founders to share any additional information that might have been requested, or, you know, and then we go back and we ask them, are they interested in moving to a more formal due diligence process? So then we move to the formal due diligence stage. And then at that stage, that's the piece that you were talking about in relation to a lead investor. So if we have more than 3 and we know we're going investors, we'll syndicate the deal. So, and it doesn't matter the number of syndicates that are going in. You could have 3 or 4 different syndicates going in on one, you know, investors from 3 or 4 different syndicates going in on one, investing in one company. So we use one nominee vehicle for that. It's tidier in terms of communications for you. But you will have got to meet everybody, you know, and you want to do that, right? You know, but in terms of the communications, in terms of sharing information, you know, access to your deal room, all of those kind of pieces, lawyers, you know, the legal requirement, all of that kind of information, it's one person you're dealing with. And we go in as one entity on your cap table. So it's nice and tidy, you know.
Yeah, great. And Anna, so, you know, when you secure your investment, you know, that's probably not the end of the line. So there's probably, you know, a relationship there after that. How important has that been for you to keep that relationship going, and to, you know, what value add have you got from your investor? I know you said it was important that they could help you strategically.
Yeah, so our investors have sort of, like, we meet with them once every 6 weeks just to update on our progress and check in, and they sort of act as like mentors and managers in a way as well. Like, we'll come to them with something we might be struggling to, like a decision we might be struggling to make, and when you're a founder, it's so easy to get, because you're so embedded in the business, to get bogged down and like not see things as the bigger picture. And that meeting with them that we have, they can just really like view things from the outset and help us make decisions so quickly that we might not spot. And yeah, so just like the advice and mentorship subsequent to the funding has been like such an asset for our business, and it's what really has helped us to allow Refunk grow. And yeah, their network, like we mentioned earlier, like tapping into their connections and contacts has also been super helpful. And yeah, they've really just helped us realize and figure out like the direction we really want to go with Refunk and what this business is all about. So yeah, it's been great to keep that relationship going in the aftermath. And yeah, so important.
Brilliant. And the investment itself, so what has that like allowed you to do as a business? You know, you obviously have plans that you wanted to execute with the investment. So have you been able to do that, or have there been challenges along the way?
Yeah, so we got 100K investment last March. So that has given us 12 months runway until next March. And yeah, like I mentioned, we had bootstrapped the business previously on like 18K over about 9 months. So to go from that amount to 100, like it was just a world of new opportunities for us. But I guess the main thing was it allowed Ellie, one of my co-founders, to go full time. And yeah, that was like the biggest thing we were struggling with, was the fact that the four of us were all working full-time jobs and then trying to grow Refunk on the side, and we were just running ourselves into the ground. It was just too much, and when you don't have that time, you just can't grow at the same extent as you need to. So yeah, since Ellie has gone full-time, yeah, we've been able to just make phenomenal progress in those couple of months. And yeah, we were able to sit down and figure out where we wanted to go. And then I guess the other main thing was hiring a tech developer full-time. So prior to that, we'd had like students coming. We had 2 different students who helped develop the platform for us as well, which was fantastic. But we really needed someone to be there full-time on the tech side, because none of us have any experience in that area. So we hired someone during the summer, and yeah, because getting the platform right is our biggest priority now for the next month or 2, that's really helped us drive that on. And yeah, we also were able to hire other marketing interns, and yeah, put money into events and marketing, which will really help us grow and build our upcycler communities, and then also our consumer base as well.
Brilliant. It's great to see how big a difference that the investment makes to the progress that can be made. Niamh, I'm going to ask you the one question. You know, most people either underestimate or don't really have any idea. But how long does the process take, generally speaking? You know, what should people allow for when they're looking for an investment?
Yeah, you know, in terms of the HBAN piece, the more, I would say, in regard to any funding, right, the more investor ready you are, the quicker this is going to move along. And investor ready can mean different things to different people, or they can interpret in a different way. Really what it is to be due diligence ready. So, you know, have your financials up to date, have a data room open. Just needs to be a Dropbox. But in there, what you're going to have is all of the information that's needed when you're going to pitch to companies that are, or to venture capital companies, or to angel investor groups, here, be it overseas, that you are ready to be able to say, yeah, here's a link. They you know, you've had a meeting with them, they said they're interested, you know, you've I guess prospected them and felt, yeah, they'd be good, you know, for investor for us, because they understand this area, and invest in these particular types of technologies, and you know, so being investor ready, and being due diligence ready is going to move this along faster, right? You know, there'd be companies that we would see that would come in, and honestly, it is hustle. You know, there's part of it that is like the founders who respond really quickly. So if I've got a query on them, you know, on something or other, and it might be to do with, you know, say they have EIS or something in there, and I might ping them back and say, can you provide the information? It's, you know, if it comes back really quickly, it's just going to move along faster. You know, so that level of communication with potential investors, that is exactly, you know, what Anna and her team did, you know, this kind of continually updating, and, you know, you don't want to be flooding them with information, right? But, you know, you do need to you know, to be, you know, communicative and be committed to raising funding. It is a huge time sink for entrepreneurs, but it is part of your job, and typically done by the CEO, and you know, not always, but usually they will want to meet the CEO, you know, it is going to move it along, as I said. If you're raising a round that is kind of in the 500 to 700 kind of range, you probably feel that with, and you're an EI client. EI, it's not a requirement for us. The reality of it is, it's such a big funder in the state. a lot of the companies that we would see, probably 90% have EI in there. So if you're raising a 600,000 euro round and you've got 250, say, from EI or 300, you potentially are going to fill that. Our average ticket size is about 245, 250, right? So you potentially are going to fill that round with angel funding. If you're raising a bigger round, if you're raising 750 million, million and a half, 2 million, I'm likely to be going to say to you, come back to me when you've got a lead investor, because we're going to piggyback the terms and conditions of your lead investor. So immediately, one of the things we're going to have visibility on is that term sheet. You know, because everything else kind of it sort of flows from that. And if we don't have visibility on it, what can happen is I could let you come in, I could let you pitch. I think it's a really great investable opportunity. I think it's a fit for it in terms of what the investors are going to be looking for. But a deal could sit there because you haven't secured your lead investor, right? And it could sit there for 2 or 3 months. It could take you another 2 or 3 months to secure that lead. And then, like, rounds can lose momentum. Angels can, you know, it's a bit like herding cats. Like, angels can, you know, see other opportunities, their investment, you know, or their portfolio changes, or, you know, they decide to invest elsewhere. And it can be just really hard to maintain momentum on their end. Whereas if you're coming in, you've got your lead investor, you've got your deal room ready to go, and you're really proactive about the communication, you know, it'll be done in 3 months, you know, but, you know, and some of that is not around necessarily our process. That's around kind of that's adding on the legal process as well. Because legals take, they're really time consuming, you know. So from time to pitch, we have a very well defined kind of road and pathway, and that process that I talked about, you know, from pitch to formal due diligence. Whereas it after that is actually where it tends to slow down quite a bit. So the more investor ready you are, the better the chance to have through that longer, slower phase, because you've got all the information ready to rock and roll.
Yeah, and I know you said it kind of came together quite quickly in the end, but, you know, for you, from starting to think about, you know, we need to take on some investment and starting the process of engagement with people, how long was it for you? Are we, you know, was it 3 months, 6 months?
I would say maybe 5 months.
Okay.
From when we started preparing our deck and sending it out until we closed out the process with our current angel investors.
Okay, great. So I think we've covered a lot there. Thanks very much for your insights. We might just finish off with maybe a couple of points from each of you. So maybe start with you, Niamh. You know, was there anything that you'd make sure, you know, founders are conscious of when they start the process of looking for angel investors?
I guess all of what I've covered in terms of being investor ready, really, and really, you know, knowing your figures well. And look, we don't expect you to have all of the answers. We would see a broad spectrum of teams. So, you know, from those who are very experienced to those that aren't, you know, and all of that, we assess all of that holistically, right? I look at every single company on its own merits, right? So there's no kind of box ticking exercise. But, you know, one of the things that I would say, Johnny, actually, just to say is that route to market is probably, I was going to say, like, we you know, we don't expect you to have all the answers, right? But what we are going to try and get an understanding of is the decisions that you've made around this, the assumptions that you're making. Why are you making those assumptions, right? So if you've assumed you know, a specific route to market or a specific buyer, and you haven't got traction or proof points to that yet, or maybe it's around the business model, whatever it might be, cost of customer acquisition, lifetime value, all of those kind of bits and pieces, those sort of metrics, you're not going to know all of it, right? And it's going to change over time for sure. But what we want to see is actually, you know, why Germany, you know, or why the Nordic countries? Well, actually, you want to be able to say, well, here's the reasons why, because this is the economic outlook. You know, they're English speaking. You know, don't have to know localization challenges, whatever it might be. You know, it could be things like governmental levies, whatever. You know, understanding why you've made that what is your thought process behind it, why you've developed these strategies. Yes, they're going to change, but right now here's what we know about the market, and really doing your research around that. So you're kind of de-risking this as an investment opportunity, because you're narrowing down the amount of things that could potentially go wrong, and that's kind of an important piece. The other thing that I say actually to most people, out of all of the decks that I see, and there's a lot, right, in business plans, and that the route to market one, I would say, is probably one of the least well defined, or tends to be the lightest. And I understand that these are early stage companies, and they mightn't have all of it figured out yet. But companies don't fail because they don't build a beautiful product. They fail because they don't get sales in the market, and understanding who your buyer is in the organization, and going out and doing that customer discovery piece before you ever get to that funding stage. So, are there 2 or 3 touch points within an organizations, or, are they very siloed, or actually are they, is it, are you going to demo, and it's demoed, are you doing a free demo, and then are you going to convert to, what are that, all of those kind of bits and pieces around, where do your buyers hang out? Are you going to do things like, events like animal property, you do things like, is it going to be thought leadership? How do you get in front of those people? What activities do you have to do to get in front of those people? And doing your research around that, and knowing that actually we're going to use a channel partnership because they've got hundreds of the clients that we want, and we're going to do a deal with, we have an agreement in place for 6% margin on it, or whatever it might be, or it's a distribution network, or whatever it might be. Talk to us about why you've made those decisions. And as I said, that route to market piece is it is really important, and it is one that is typically a little bit wavy handy in the decks.
Sure. Yeah. Great. And then Anna, we'll just finish off with yourself. And so is there anything that you think you'd do differently if you were to do it again, or things you'd recommend people did that you might have done better?
I think maybe, one thing, if I have to pick out, is probably that we didn't launch our website maybe soon enough. We definitely put it off and wanted to wait until it was perfect. And then as a result, it was harder for us to prove that we had traction, because like I said, our only traction was through Instagram. We've subsequently changed our business model, and now we're relaunching it again, but that's another story. But yeah, I would say just launch as soon as you can, and from there is when you're going to be able to figure out what changes you need to make, what's working, what's not. But it's also a way to prove that, this is how many customers we have on board, this is how many sales we've made. And that seems to be I don't know if Niamh agrees, but it seems to be one of the most important things you need to show on an investor deck. So yeah, I think if we had it back, not that we have huge regrets, because obviously this is all one big learning curve, but maybe we should have just gone for that sooner.
Great. Listen, thanks very much, Niamh and Anna. Some great nuggets in there for all the attendees today. We might just go see if there's some questions from the attendees. Nicola, any questions there?
Yeah, so thanks a million, Anna and Niamh. There's a couple of questions here from the attendees. The first one is asking, what's the best way for a financial fund to get angel investments, given that the firm already has a strategy, team, and the other basic building blocks, they just need capital? So Niamh, maybe, I'm not sure if you can answer that one.
Yeah, I'm not. It's a fund, an investment fund that they're looking for. Probably network is probably so you have, so this isn't a company looking for funding, I gather. So that's not, honestly, that's not what we do really. We do have within deep further, there is a further ventures fund for sure. I would think probably networking and going and talking to people to find out who has capital to invest at that kind of a level, because they're going to need to be kind of large checks. That's not really what we do. We don't set up funds. We invest in companies, we manage the network and source the deal flow and do the education piece for angels. We're not a venture capital fund. So I would suggest, sorry.
Yeah, I'd say, Nicola, it's probably more, a fund that's looking for family offices rather than angel investors, but the sounds of it, an institutional funding, I think, something like that. So it's probably not an angel investor kind of query, but yeah, but some angel investors have family offices, so maybe, but it's probably a different route than.
Yeah, our network includes the likes of family offices and private equity and that, and some angel groups. But is that the same investor, or the same question? What's the best way to get in front of angel investors? Is sometimes it can be difficult to find networks or individual angel investors. Probably a group is the answer to that one. We're just going back to that first one. And look, Enterprise Ireland and those people are probably the people to go and have a conversation with first, because you're going to need capital from the likes of them as well.
Perfect.
Yeah, not really what we do.
No, that's great. Thanks a million. There is another question here from Silva asking, how do you find the angel investors? So based in London, so I know HBAN would maybe be a good port of call in Ireland, but have you any sort of advice in terms of where to start when you're looking angel investment?
Obviously we do have an angel investment syndicate, or a London syndicate. So I don't know whether Silva's company is Irish headquartered or not, but there are, the likes of, if you have a look at, I think it's Bowhurst has a blog, and they have like the top 20 or 30 angel investment groups in London. There are a lot. It is quite a competitive market, so you shouldn't have any trouble if you go and do the homework and the research and finding them and connecting with them, and then sending on a good deck is probably the way to go, or just connect to them initially and find out. Some of them you'll have a type form application, others they'll just ask you for a deck, whatever their process is. But yeah, Bowhurst is probably a good one to start. And if you Google angel groups, in London-based angel groups, you'll probably come across them, or articles written about them, or engagement. But it's really a bit of research. It's like any VC, or sorry, the other one is PitchBook. Would probably be a good one to have a look at as well. So there's platforms there that have the registration, that say what areas they target, and they'll talk about the technologies that they might invest in and that. So it's kind of getting out there and doing your homework on it.
Amazing. That's super. Thanks a million, Niamh. Conscious that we are sort of just a couple of minutes over the time for today, but a lot covered in that session. So thanks again to Niamh, to Anna, and to Johnny for sharing today's discussion. As I said, a lot covered. We have recorded today's session, so we will send that on to you in a follow-up email. If you do have any questions, do feel free to reach out as well. But hopefully that session's been of benefit to those of you who have tuned in. Again, thanks a million. Really, really useful to have both Niamh and Anna here just sharing their experiences, getting it from the two different perspectives as well. As I mentioned at the start of the session, this is all part of our Access to Finance programme. So we are digging a wee bit deeper into different areas of funding throughout these 12 months. So please do tune in if there's something that might be relevant to you. We are launching e-learning very, very soon, so keep your eyes out for that. But yes, thanks again to our partners for supporting us with this as well. But hope you all have a lovely rest of your day, and thank you all very, very much. Thanks. Bye.
Bye. Bye-bye.
Thank you. Bye.
Bye.
Thanks.